Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify, Apple, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. This content is brought to you by Uphold, which makes crypto investing easy. I've been using Uphold since 2017. They're one of my go-to exchanges. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. Uphold also has other assets that you can buy, sell, trade, such as precious metals and equities. If you'd like to learn more about Uphold, please visit the link in the description. Well, folks, I've got some very big and bullish news to share with you all. It's all good. Watch the video to the end. We're going to talk about crypto banking opening up in Hong Kong, Mastercard doubling down on crypto efforts, and PayPal opening up crypto withdrawals. This is really great news. So first, let's talk about Senator Elizabeth Warren anti-crypto bill not making it to the floor this week. As you all know, I reported on the podcast that I had some folks tell me this week she was going to introduce that anti-crypto bill. Well, she's not getting co-sponsors apparently, which is great news. So Senators Elizabeth Warren and Marshall delay reintroducing crypto bill due to lack of sponsors. The latest version of the bill text, which has not been publicly released, includes the same language opponents originally found troubling, according to the documents obtained by Blockworks. So of course we know she's trying to shut down crypto as much as possible. She's working very closely with corrupt scumbag regulator Gary Gensler. If you all recall, she's been sending him questions and answers ahead of hearings. They've been colluding together to try to slow crypto down. Once again, not to kill it, but rather to allow the big banks and the TradFi incumbents to come in and take over. So that's been going on, and we know she's added to her campaign an anti-crypto slogan. So the bill, which was first introduced in the Senate last session in December, looks to require the crypto industry, including individual miners and validators, to abide by Know Your Customer rules. Industry members were expecting a revamped version of the bill to debut on the floor this week, but two insiders shared with Blockworks that the senators have delayed its reintroduction because they want to find more co-sponsors. Let's hope they don't find those co-sponsors. Here's an excerpt from, I think, the bill here per certain documents. The following groups will be responsible for adhering to KYC policies: unhosted wallet providers, digital asset miners, validators, or other nodes that may act to validate or secure third-party transactions, independent network participants, including maximal extracted value searchers, minor extractable value searchers, and other validators or network participants with control over the network protocols, per the documents. Warren announced in early 2023 that the bill would be making the rounds again, highlighting heightened concerns about increased hacks and illicit actors overseas. Here's a quote: Roger Marshall and I are reintroducing our anti-money laundering bill to clamp down on crypto crime and give regulators the tools they need to stop the flow of crypto to drug traffickers in places like North Korea, Warren said during a Senate Banking Committee hearing in February. Bill opponents argued that the legislation goes too far. The expectations being put out on the industry are unattainable, crypto advocacy group at the Chamber of Digital Commerce said earlier this week in response to the bill. The proposed law aims to eradicate digital asset innovation from the United States at the expense of market security by imposing impractical and unworkable compliance burdens on the industry participants, the Chamber of Digital Commerce said in the statement. So, of course, once again, we know what the aim here, the goal is of Senator Warren and the anti-crypto stance, working close with corrupt regulator Gary Gensler. So we need to keep fighting, folks. This is why, once again, call to action, folks. Contact your representatives, make content, tweet, use social media to your advantage. We see Gary Gensler putting out video content every time he's going to go under fire or there's some hearing, right? He's trying to change the narrative. We need to make sure the facts and all the details go out there and break down those false lying narratives that he has. So this is what we're dealing with. Now, Jake Cherversky of the Blockchain Association tweeted out the news about this bill, and he said Senator Elizabeth Warren's bill would impose a de facto ban on crypto in the USA, criminalizing all sorts of legitimate activity like mining and staking, while doing nothing to actually combat illicit finance. It's no surprise she's having trouble finding co-sponsors. And like I said, let's hope it stays that way. We're seeing more pro-crypto members of Congress coming together from both sides of the aisle, Democrats and Republicans. So I think she's outnumbered right now, but we got to keep fighting. We got to keep supporting the pro-crypto members of Congress, because we're in a battle here. And as you can imagine, guys who hate crypto, like your Warren Buffetts and Charlie Mungers, they're probably funding the likes of Elizabeth Warren, not to mention short sellers who are funding her and all the activity she's doing. But while all this nonsense is happening in the United States, Hong Kong is moving ahead, and not just Hong Kong, but other major countries. So Hong Kong regulator requires banks to open accounts for crypto firms. Hong Kong's central bank has urged banks to provide services to crypto firms before receiving a license. Folks, look at the juxtaposition and the dichotomy between these two things. It's pretty amazing. So the Hong Kong Monetary Authority, the region's central bank institution and regulator, has called on banks to provide services to cryptocurrency firms. On April 27th, the HKMA issued a circular related to the access of corporate customers to banking services. In the document, the regulator has required authorized institutions, referred to as AIs, to adopt a risk-based approach in anti-money laundering efforts. The HKMA also urged the institutions in Hong Kong to pay attention to market developments and take a forward-looking approach to new sectors like the crypto market. Hong Kong Central Bank has specifically required that institutions to help virtual asset service providers in getting banking services, stating AIs should endeavor to support the virtual asset service providers licensed and regulated by the Securities and Futures Commission on their legitimate need for banking accounts in Hong Kong. Wow, folks. The world is moving ahead. And, I've said it many times, crypto is a global asset class. Never before has anyone with an internet connection being able to participate in the same asset class globally. And you don't have to be an accredited investor. You could literally put $10 into Bitcoin, Ethereum, XRP, Cardano, whatever it is, and you're a part of the same asset class as a billionaire who's holding Bitcoin and those other tokens, right? It's pretty incredible. And we also got news out of Hong Kong that around 10 fund managers have gone crypto, but more are expected. Fund managers across Hong Kong have been recently granted special licensing upgrades to handle more crypto. So their regulators, their government is opening up. They see the opportunity, and their central bank is calling for banking services to crypto companies, and the funds and investment firms are doubling down. So local managers in charge of funds with 10% gross asset value in digital assets need to apply for an upgrade to their necessary Type 9 license. Until now, interest has been fairly muted. Only 10 fund managers across Hong Kong have upgraded their licenses to manage crypto since the SEC, or the Securities and Futures Commission, which is their version of the SEC, issued guidance in 2019. Michael Wong, partner at the law firm Desert, told Blockworks. Interest appears to be rising, with 3 or 4 of that cohort upgrading in the last 6 months. Wong expressed the licensing application with the SFC is now a lot smoother and shorter than the past. Hey, Gary Gensler, you listening? Yeah, these folks seem to know what they're doing. They're not trying to block innovation and investment. They're trying to make it easier. So here's a quote. The SFC is more comfortable granting the virtual asset license upgrade to fund managers nowadays, as long as the fund managers have the requisite experience and expertise and appoint appropriate service providers, including trading platforms, custodians, and fund administrators and auditors, he said. Interest in Hong Kong's crypto future has likely been spurred to its business-friendly environment, low tax rates, quality workforce, and geographic proximity to mainland China. Wong noted that the SFC is now allowing managers to invest in a large universe of digital assets and establish more complex products focused on Web3. This is bullish news for the crypto market. I just wish the United States would get its act together. However, we're seeing the big TradFi incumbents like Visa and Mastercard and so forth are doubling down. Once again, you just look at these two things, the contrast of what's happening, and it's like, okay, you see why Elizabeth Warren is doing what she's doing, because she's allowing these TradFi companies to come in and take over. So Mastercard doubling down on crypto blockchain efforts with new offering. The payments giant is teaming up with Aptos Labs, Ava Labs, Polygon, and the Solana Foundation to reach application developers. Now, to some people, crypto's a bubble, a scam, a Ponzi, a pump and dump, and you name it, all kinds of negative things have been said. But why would the biggest companies in the world, Mastercard, Visa, BlackRock, NASDAQ, Fidelity, and so forth, be launching crypto services, partnering with crypto projects, and building on the said projects? Think about it, right? For those of you who are still skeptics, maybe you're on the fence and you're listening to this podcast, think about it. You can go do the research. You can read up on all these things. These big companies are investing lots of resources and capital to get on board, because they know if they don't, they will have their blockbuster moment. And that is not adapting to the innovative, disruptive technology and then going out of business. So Mastercard is looking to create infrastructure necessary to better attest blockchain transactions as regulation around the sector remains a work in progress, the company said on Friday, called Mastercard Crypto Credential. Oh, I love that. Let me read that again, that name. Mastercard Crypto Credential. What now, haters? What now, skeptics? The effort would define verification standards and offer technology needed for various use cases around the segment. Central banks and financial institutions have sought to address security and compliance vulnerabilities as the scope of blockchain technology has evolved. Raj Damodharan, if I'm saying that right, Mastercard's head of crypto and blockchain. Yes, folks, they have a head of crypto and blockchain, wrote in a blog on the company's website. Here's a quote: "But to fully implement these rules and build scalable use cases, we need a way for trusted, compliant, and verifiable interactions to take place on public blockchain networks." Let me read that last line again. To take place on public blockchain networks, not private, not wall gardens, not JPM coin within the JP Morgan banking system or Quorum or whatever it may be, public. And that means that is open to you and I, the tokens. So they mentioned like Solana and so forth, right? You can hold those tokens, folks. Don't miss how significant this is. Some are trying to say, oh, but no one's going to want to use these public blockchains. What if Bank of America and JP Morgan build their own blockchain? Then that makes crypto irrelevant. Oh, but you don't understand. It's about trust. It's about transparency. And no one, if you have a private blockchain, that's okay. You can use that within your own company. That doesn't mean another company is going to trust it. That doesn't mean other institutions are going to want to build on it and use it because it's centralized and you use it. A public blockchain, many are decentralized and some are, in their infancy phases where they're becoming decentralized. And it's open so you can see the network and what's happening and you can build on it and use it. And even the public and private sector can interact on it, right? That's the difference. That's so key. Guys, I hope you catch that, how important that is. The level of verification needed for someone to receive an NFT, for example, differs greatly from the authentication required to transfer digital assets to and from crypto wallets, the company said. Mastercard Crypto Credential would provide straightforward alliance or aliases to help consumers more easily share wallet addresses. Boy, there's a lot of really bullish statements in this article highlighting what they're looking to do in their vision. They know you got to use public blockchains, and this is for mass adoption. Notice how they're talking about you need straightforward aliases to help consumers, right? Talking about the billions of consumers out there to easily be able to interact with these Web3 blockchains and crypto, right? Because I've said it many times, the next 2 billion people are not going to want to deal with these cryptographic addresses and, how cumbersome they are and things like that. Now, you and I, as early adopters who may be tech savvy, understand it. We've used it. We know how to transfer our crypto. We know all that. Like I said, the next 2 billion people, the people who are older and in different walks of life, are not going to care about that. They're going to want to know, I can easily buy it and store it in maybe in a trusted institutions like Fidelity or Citibank or whatever it is, right? And that I can easily move it. It has to be easy. The on-ramp for these next few billion people has to be easy. And big companies like Mastercard, not to mention other crypto startups in the industry, are looking to build this. This is how you bring in, once again, the next few billion people. Mastercard added in the blog post and use metadata to define wallet attributes to ensure only intended transactions are completed. The new offering would also utilize CipherTrace, a crypto intelligence firm it acquired in 2021. I remember this news. Do you remember this news? So they've been acquiring crypto companies. They have a crypto team. They have a head of crypto, and they're building and looking to set up the infrastructure here, folks. They are bullish on this technology and the future of it. So they acquired this firm to help verify addresses and support compliance with cross-border transaction regulations. Aptos Labs, Ava Labs, Polygon, and Solana Foundation are set to help bring Mastercard's new offering to application developers. So bullish, guys. So bullish. And of course, we recently talked about Visa and their plans to expand their crypto team. I think it was this past week, if I'm not mistaken, I reported on that, right? So the biggest credit card companies are in here. The banks, the stock exchange are all here. So don't be fooled by the fudsters who are out there spreading all types of negative things. Are there scams in the crypto market? Of course, just like there's scams in every industry, right? But that is not encompass the entire market. There are legit projects being built and adopted by real companies. And if you see someone who's like a Warren Buffett or Charlie Munger coming out so hard and everything is negative, they can't even say, hey, this technology is good, I don't like it, but they just come out and say, it's a venereal disease, it's rat poison squared. You know what's happening, folks. You know what's happening, right? Trust your gut. Go research it yourself and you'll see these things don't add up. As far as the negative news and the FUD, it's like, wait a minute, why are you so scared of this? Why are you attacking it so, ferociously? And it's like the disruption's happening. The disruption's happening. Finally, PayPal. Today, they announced that they are introducing crypto transfers for Venmo customers. New feature enables customers to transfer cryptocurrency to friends and family on Venmo or PayPal and other wallets and exchanges in the crypto ecosystem. This is a big, big move, folks. And it's needed because you can't have, crypto without you being able to withdraw it and transfer it. I think they started off with, okay, hey, we'll custody it for you. But, they need to allow advanced users and people who want to move it to be able to move it. Now, there may be a big segment of their customer base that is just going to leave it on Venmo and PayPal because they trust the brands, right? And don't get me wrong, I'm not saying you shouldn't trust PayPal and Venmo. I personally believe in self-custody until there is maybe, let's see, wallet 3.0 in the crypto market, right? Crypto wallet 3.0, where we've gone through multiple iterations where there's less chances of hacks and these things happening and centralized entities going down and lose your crypto, right? Just look at FTX, just look at Celsius and so forth, right? We don't want those things to happen. So you want to be able to trust these institutions. Today, we are taking steps to make the management and movement of cryptocurrencies for Venmo customers easy by introducing the ability to transfer crypto to friends and family in the Venmo community. Customers will also be able to transfer to a PayPal account and to external wallets and exchanges, delivering more choice and flexibility in how they move and manage their crypto. Crypto transfers will be rolling out to Venmo customers over the coming weeks, starting in May 2023. Customers continue to turn to Venmo to help manage their crypto. More than 50% of Venmo crypto customers say they chose Venmo specifically for the safety, security, and ease of its offers. And over the last 12 months, more than 74% of Venmo crypto customers have continued to build their crypto or hold their crypto, I should say, in their Venmo account. In addition, since the beginning of 2023, nearly 50% of customers with existing crypto balances have added to their crypto holdings on Venmo. So, guys, very, very great news here. Pretty bullish. Look at the names I'm calling out here: PayPal, Mastercard, and obviously big banks and the central banks in Central Bank of Hong Kong is allowing crypto companies to get funding now. So, and then of course the big one, Senator Elizabeth Warren's bill not getting the votes, the co-sponsors. This is great, but we got to keep fighting. She's not going to stop here, right? She's going to try to find another angle. Probably meeting with corrupt regulator Gary Gensler to try to find another angle to slow crypto down. All right, guys, let me know what you think about this news. Leave your thoughts and comments below. Hit the thumbs up button, and I will talk to you all later.